Buying an investment property with equity from your home. Have you ever wanted to buy an investment property, but you have no cash for a down payment? Well, lots of people find themselves in this situation, but luckily there are ways around this. So in today's video, we're gonna be talking about buying an investment property with equity from your home. Before we get started, make sure to hit that subscribe button if you haven't already so you don't miss out on future videos. So how do you do this exactly? Well, one way to do it is to take the equity from your primary residence. So this would be the property that you live in. You would take out something called a HELOC, which is a home equity line of credit, and you're gonna use it as your down payment. This is a really popular way for investors to get started. A home equity line of credit is where you take the value of your property. So say your home is worth $500,000 and you have $300,000 owing still as a mortgage. Well, that means you have $200,000 as a home equity. So now you can take that as a line of credit and use it as a down payment. So at the time of filming this video, the interest rates of banks are historically low, which will also apply to your line of credit on your home. This means you can take a HELOC from your home with very, very little interest. And by doing this, you're basically financing a rental property 100% through the bank. So infinity returns. When you're trying to spread out your capital, leverage the cash and savings that you have, and use mortgages from the bank, it helps go further and build your real estate investment portfolio without draining your personal cash reserves. So you do want to be careful when using a strategy like this. You want to make sure that you can service the debt on the entire property safely, and we recommend that you use fairly conservative strategies. So you want to buy something that you know will rent and you know what you can charge for that rent. So maybe buying something with a huge unknown maintenance cost is not the best way to go. So this will help make sure you can pay all the normal costs of a home, like your mortgage, taxes, maintenance, etc., but also be able to pay down that line of credit that you took out to purchase the home in the first place. So if you're thinking of using a strategy like this, there are the two big takeaways here is that this is a really, really smart way to leverage your money. And secondly, we do have to be conservative with those numbers because you are gonna have a little bit of an extra cost in trying to service the debt on that HELOC. So another thing to keep in mind is that you do need enough equity in your current home to be able to take out a line of credit for the strategy. And to understand your numbers properly, please make sure you're talking to a qualified mortgage broker, which we're happy to point you in the right direction. So have you heard of this strategy before when it comes to real estate investing? Let us know in the comments below. And if you are interested in getting started with investing, make sure to click the link below to download our free Getting Started guide. Inside you will find lots of information to help you get set up for success. Once you have downloaded the guide, we would love to help take the next steps with you. So please fill out our application form below. Thanks so much for watching. If you enjoyed this video, please make sure to hit that like button, subscribe, and share this on your social media by tagging us at Alberta on Fire.